Hello everyone and welcome back. Today we're going to be looking at what is my biggest holding in the stock market. What position is my largest? And as you can see on your screen there, this is going to be Facebook. Now Facebook is certainly my largest position. I have some that are close in terms of percentage of my portfolio as well, but this certainly is the top in terms of percentage of my portfolio, representing around 10% of my portfolio right now in general across my accounts. And there are many reasons for it. I was going to say that obviously Facebook is a fantastic stock to hold. If you don't own it, I think it's something you want to look at. Currently priced at $181.77 per share, obviously going up and down. We're in the middle of a trading day. But I want to talk about the reasons why I think this should be your number one holding as well. Obviously, it's important to do your own research on things because that way you get a better estimate of what you're actually buying. But I think Facebook is a surefire holding for the next 10 years even. And I think people can make a lot of money if they invest in Facebook on these at this valuation right now. So let's get into a couple of reasons why. First, I'd like to go over the fact that it's obviously still a company growing rapidly. You can see that in all their segments, their daily active users, monthly average users, and annual average users, all increasing steadily in all segments in all areas of the world, still increasing, not only on the Facebook platform, but obviously the rapid growth of the Instagram platform, as well as WhatsApp. And on top of that, Instagram is pretty much, I would consider, still in its infancy as far as any sort of growth is concerned, just due to the fact that they haven't necessarily monetized it as much as they have Facebook. And there's a lot of new things expected to come out for Instagram. Obviously, one of them being Instagram Shop. Instagram Shop is a way for their bigger content creators to sell certain products. Obviously, the biggest content creators on Instagram are going to be like models, people like that, who post pictures, obviously, highly edited, just so you know. But regardless, it's going to be a platform for them to create links to sell those products directly on the Instagram Shop platform. And I think this is very well going to integrate with Facebook's new plan as far as Project Libra is concerned, their cryptocurrency they plan on making. This would be a fantastic incorporation there. But overall, if they get that cryptocurrency going for the Facebook platform, it would be ridiculously good money for them. Their company already printing money, and we'll get into that later. But that would help push this Instagram shop a lot more, because it'd just be a consistent currency you could just pay for on there. It'd be a lot easier that way. But on top of Instagram Shop, they also naturally have Instagram Live, which some content creators will be making, like shows, I want to say, videos, shows, pretty steadily, that people can subscribe a monthly fee for, and they can get access to that premium content, I would say. So obviously that's a newer program that they've just recently announced and are going through with, which is going to be fantastic for them in the future. I know it is. Obviously people love their subscription services, and that is kind of the way forward for most companies here. So I think that is yet again another great platform. On top of that, we have WhatsApp, another one of the smaller Facebook platforms, but still a one that is growing pretty rapidly. And they've pretty much introduced no monetization on that platform as well at this point. So once they get that up to where they want it to be, I'm sure they're going to start monetizing it. And absolutely, they're going to go ahead and dominate and print some more money that way. So on their growth prospects, I think they are set right now. Will I see them purchasing another company? Not anytime soon, I don't believe, but I could see it I could certainly see it, but I think they have all that they need in terms of growth prospects. They can do whatever they want at this point with the money they have, so I don't know if they necessarily need to buy a company, but I could see them doing it. So as far as these financials are concerned, we'll just get into some of the statistics as far as this company goes. 519 billion market cap. Obviously, it shows the dominance of what all they hold, which is looking good. A trailing P of 30.78. Certainly, I would not consider that ridiculous as far as tech stocks are concerned right now. But I think the most impressive part of this is going to be this forward PE of 19. I think that's overall ridiculous value, especially for tech stocks at this point, which are all a lot of these companies are negative in terms of their earnings, so they really don't have a PE, but somehow they're still valued even higher per share than Facebook is. So I think as far as the market's concerned, somewhere around a 20 PE is a very fair value in my consideration. So a forward PE of 19.18 just shows you that this company certainly is not overvalued, and I believe there's a lot of room to go forward with this because through previous history you can see tech usually outweighs in terms of average PEs. Normally the average PE of tech companies is a little bit higher, and I think that just shows obviously Facebook's not overvalued in that aspect, and if they did get overvalued in that aspect, it would still be relatively normal, and it would be certainly a lot of money to be earned. But obviously that price to earnings ratio can keep going down as long as they keep on increasing their earnings, which they certainly are. We can get into that later. Over on the right here, we can see a 52-week high of $208 per share, 66 cents, which obviously is nowhere near where we're at right now. That was after a very good earnings. They popped up there, and ever since, the market's been beat down with news of tariffs and the trade war. So that's why we're sitting at 181.41. So I think it's certainly a good buy at this point. In my opinion, I think it's a good price to pick this stock up for. We can go ahead and keep on going down here with an operating margin of 34.41%, profit margin of 27.26. Obviously, they're printing money. We'll see more on that in the future. Revenue we'll go more into later on a different page, so we can see an increase in revenue. Part of the reason why I currently hold such a large percentage of Facebook will be for this category over here, dividends. They're not a company that pays dividends at the moment, and I think there are many reasons to it. Overall, in terms of the history of the stock, I believe it's still in its infancy, and a lot of these stocks still in their infancy and their growth phase, I would say. Infancy or growth phase, whatever you'd prefer, they're not going to be paying dividends because they're going to be focused on using that money and investing in the company and growing the business. They're still in that phase of growth, and I think they still will be for another five years at least. But down the road, I could see them turning into a company due to the amount of money that they have in reserve already and the amount of money they make on a quarterly basis. They absolutely could pay out a good dividend around 2%. Think of a company like Apple. They haven't always paid a dividend, but once they established themselves, they finally started going to, and I think Facebook will go there at some point, which will obviously attract a lot more people to the stock, increasing price. Just a very much overall good thing whenever a company pays dividends. So in the future, when they start paying a dividend, I think this will increase share price even more. So I think it's better to get in while you can. And once they start paying a dividend, I'm just going to hold on. Just going to keep on holding on. Obviously, as I said before, total cash on hand. Haha, crazy, right? $48.6 billion. And that's their most recent quarter released. But $48.6 billion is what they have. Woo! That's a lot of money. Obviously, they've been facing some legal troubles in terms of privacy concerns. Obviously, my opinion on that is, why are you going to complain about privacy concerns if you're going to post all your private information online? Regardless of what they have to pay, obviously they had to pay $5 billion to the FTC, but that's overall not much. It's a fraction of what they own, and they make $5 billion in half a year. They make $5 billion in cash, so nothing really to worry about there. With a debt of $7.81 billion, again, just a fraction of their cash, so nothing to really worry about there. So I think overall, very good cash flow, very good company. We're going to the financials. We can see a growth in revenue starting from 2015, posting $17.9 billion in revenue. This is on an annual basis as well, just so you know. 2016, $27.6 billion. 2017, $40.6 billion, and all the way when they end their fiscal year, whenever the actual full year ends, which is a little bit interesting. So the fiscal year is easy to track. So right now in fiscal year 2019, last year they ended making $55.8 billion in total revenue. So naturally their cost of revenue being $9.3 billion, so that gross profit of $46 billion. My gosh, that's a lot of money. That's all I'm saying. This previous quarter, they spent a significantly larger amount in terms of research and development. Now that they're working on these privacy scandals, they're really spending a lot more in terms of payroll, increasing the amount of people they have on staff in order to fix this, legal expenses, stuff like that. They're really working on improving, so that's something to look at. But once they get past this phase, I think it's just for now driving the share price down for us so we can buy at better value. So I'm okay with it. I've been looking to add more anyway, so if we can bring down the share value, I'd be okay with that. Just being honest with you. Now we're going to go over onto this balance sheet. Again, cash and cash equivalents combined, their total assets are going to be $50.4 billion, where they have $10 billion in cash on hands. Their short-term investments around $30 billion, and their receivables, so there's something that is money that's owed to them, is $7.58 billion dollars. Fantastic. Nothing on their long-term investments. Their property, which would be different things they own, company-wise, different plants they own, $24 billion worth of land and buildings. Goodwill being their donations of $18 billion. Intangible assets of $1.2 billion, and just overall other assets. So in their total assets, of what they have in total as a company is $97.3 billion. Ridiculously good amount of money again, and their accounts payable is very low accounts payable, not even $1 billion there, and liabilities being legal expenses, stuff like that, of $4.4 billion, $4.5 billion, we'll say. So overall, just a fraction, absolutely a fraction of what they have there. So certainly a good thing to look at. And finally, I would like to go ahead and just go ahead and look at earnings history. So we'll click on this, look at previous earnings. Another thing to look at, they're going to give you this, obviously, analyst estimate. I don't care too much about, so we'll go ahead and take a little look at the earnings history here. This is going to be the previous 4 quarters. Their EPS estimates versus what they posted. Obviously, see in these past 2 quarters, certainly below estimates. The reason for this entirely being those legal expenses, as mentioned previously. They went ahead and had to spend a lot more in terms of that and their legal expenses, so that's what's dragging their earnings per share down. Still positive though, so they're still making money at a good amount. Think about the business they do, the revenue they do. Obviously 0.91 earnings per share, not as good as they have been, but overall they're growing significantly in terms of earnings per share. It's just this fiscal year probably is going to be a little bit lesser than the previous, but overall a 5-year growth of earnings per share, somewhere around 20% increase every year. So I think it's good to look at. They just continue to print money. Obviously, stuff we enjoy. We want a company that we're investing in to print money. So I say, overall, this is a fantastic company. I hate doing this, but we're gonna look at. Obviously, we can now go look at these stupid analysts. Screw those analysts. After all, I say, but we're showing a recommendation. Obviously, a buy rating. We can take a peek. I love just clicking on things, but anyways, overall, there's a good reason why Facebook is my number one holding, and I think it's something you should certainly look into if you don't currently own any Facebook shares. I think it's worth investing in Facebook right now, and I think you're going to make a lot of money in the future if you do, at least 10 years down the road. So something to look at, and I appreciate you watching. Thank you.